Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Dadia. We have with us Riya Singh, technical analyst. Currencies joining and welcome to the show, Riya. My first question coming to you here is with regards to the announcements that have come in from the Federal Reserve. They have kept the interest rates at ultra low levels. They've reported a pledge to use its full range of tools to support the economy. However, they've cautioned that the outlook will depend significantly on the course of the virus. Now, taking this into consideration, if you see the US dollar as well, that has fallen to a 2 year low. Uh, how would you actually put this into perspective?
Yes, good morning, Viral. Obviously, if we were not expecting from the start very much with respect to the Fed statement, okay, because already whatever needs to be done is already put in place. Uh, Obviously, if you look at the past statement of Fed Reserve panel, they are quite strict. They do not go along with the idea of the negative rate. So any change into the negative rates was not expected. Uh, yes, they have stated that they are far from thinking of increasing the interest rate due to the current scenario with the economic health of the country. So taking the perspective, yes, we were expecting few guidelines from the Fed, if, with respect to how much the economy has taken a hit with respect to the virus, the economic recovery, how much it has been affected, what will be the reinforcement of the monetary support of the Fed, what will be the momentum, will they increase the momentum of the monetary support? Also, to answer the few questions, what will be the adjustment with respect to the bond buying? Now, if you look, the Fed has been continuously expanding their balance sheet, buying bonds of the corporates as well as the companies. So, what will there be any adjustment with respect to that? Or there will be any change into the lending facilities? So these were the few questions that were in the mind before the Fed statement. But if you look at the statement that have come in, yes, they have said that the current momentum of the fiscal policy that is there, that will be put in place with respect to the economic health. They are still very uncertain because the numbers are still peaking up into the country, and the second wave of the pandemic is still on the minds. Like it will still there's a risk pertaining to it. The With respect to the bond buying and support to the economy, I think they have lent out emergency lending programs, which is meant to keep the credit flowing to the business and state governments going on. So, and they are still into the purchasing of the government backed bonds to support the government with the funding and such. But overall, the main concern with the Fed will be to make the government, put forth the fiscal deal. They have already done, and there is a talk of another $1 billion to be put in place. That is still, the bill with respect to the same is still in the White House going on. The debate on that is still going on, as it will put a dent onto the government debt overall, but that is the need of the hour. So that is the one hassle that the Fed has to tackle with, because just alone keeping the interest rates, uh, uh, buying bonds will not be enough. There is a support that is required from the government as well. So that will be a much interesting part to look on. So going forward, I think the pressure will be built up on the dollar, and we can see dollar weakening a bit into the coming session, and the same can be reflected into the dollar index as well.
Right, so that's with regards to where the dollar index goes. Simultaneously, if you see the yen, now that has been on a rise if you look at it with regards to the dollar as well. But if you have to look at the yen rupee pair as well, do you think probably we could see levels of say 72, 73 by the end of the month?
Yes, Hiral. If you look at the yen scenario, Japan was one of the few countries to get over the pandemic case, to get it under control. But then there was a hit by the second wave, and the numbers have again peaked up to its previous highs, with an average of 700 cases every day, which is a saddening part. Though Japanese government did raise the economic view for the country, but the rising case cannot be ignored at a time where Japan is currently in its worst post-war recession due to the health crisis, which has put a dent on the Japan's business activity and the consumption. But if you look at the Bank of Japan, the central bank has played a very crucial part by keeping the stimulus package unchanged at 110 trillion yen, which is a huge amount, providing with the, and going on a extra mile by providing with the interest-free loans of the companies and purchasing the corporates and the commercial papers. Uh, the ultra easing interest rate has also put forth to aid into the economic recovery into the recent recession period that they are going through. So if you look at the overall outlook on the yen, I think the global growth after even the Fed statement, we can see that there is some delay into that part. The economic recovery will have a delayed part, and there is a pressure on the dollar due to the increasing government debt, nearing elections, the geopolitical tensions that is going on. So in situation, obviously the investor will run to a safe haven, and I think again acquiring that status is expected to go well, and there can be a pickup momentum into the yen from the lower levels. So I think anywhere around 70, if you see a pullback, I think it would be a very good level to go long onto the yen because the future perspective does look bullish on the yen.
Right. So taking these levels into consideration, Ria, what are the strategies that you would want to recommend?
The rupee has been actually quite playing bandwidth performance. There is actually, with the healthy inflows, but there are a few points that are concern of interest, such as the fiscal deficit and India posting the surplus of around $790 billion, which is actually not a good thing because of the plunging trade and import bills. So I think as far as rupee is concerned, it will be into a range bound momentum. Definitely the range that is to be looked forward for, since this is the first day of our August expiry. The bandwidth that we can look for the month is 75.50, 74.50, because this is the range that the rupee has played for an entire month last year. The entire contract has been playing out into these bands. So breach of any of these channel levels will indicate a further momentum. But as far as this band is maintained, there will be a zigzag momentum that can be witnessed into the pair. So if in today's open there is a breach of 74.90, you can definitely go short into the pair for the level of 74, 75, 74.65. And if there is a breach of 75.11 on the higher side, go for a long for around 75.30 in the coming sessions. So play these levels for taking position into the rupee. Be cautious because the momentum that we are seeing is quite a narrow range momentum. So please play along these levels and be cautious and keep a strict SL for the rupee into the coming sessions. As far as yen goes, yen is definitely looking on a higher side. So buy from the lower levels. Look out for a level of 71, 70 dot 66 for the for the end, if you get on the lower side, 70.66 is a very good level to buy, especially 70.66 if it comes down. But for an intraday session, definitely look for a breach of 71.46 to go long into the pair. uh, Another strategy that you can follow is pound. I think there can be, pound has been continuously into the higher highs. There can be some turnaround into the pound if it opens on a negative note or below 97. So below 97 is a good level for going short into the pair.
Right. All right, Riya. Thank you for sharing the strategies as well. In fact, any option strategies in dollar rupee for this expiry?
Option strategy for now, I think it is the first day of the contract. It will be a premium thing to go on for, but you can definitely look for a 75 call if there is a breach of 75. Always go for a nearer strike rate because of the band playing situation that is going on into the pair. So this is not the time to go for a 25 paisa, spread. So go for a nearer strike, whether it comes to a call or a put. So if there is a breach of 75, go for a 75 call because that is the only strike rate that will pick momentum as compared to the other strike rates, even it is a 25 paisa spread. So go for a 75 if there is a breach of 75. Go for a call of that. Otherwise, if there is a breach of 75, 74.90 on the lower side, you can definitely go for a put of 74.75. So 74.75 put and 75 call. These are the two option strike rates that you can look out for depending on the open and which side the momentum supports.
Right. All right, Riya. Pleasure speaking to you and thank you for sharing the strategies. Thank you everyone for joining in.